everyone, welcome back. You're watching Market Wrap, an initiative by ICICI Direct, and I have with me Mr. Pankaj Pandey, Head Research, ICICI Securities. Pankaj, welcome back.
Thank you, Geetu.
Markets are holding up. Nifty above 15,000, Sensex above 51,000. Bank Nifty is also up nearly 1% for the week. What is expected? I mean, they're holding up very well.
Correct. So after 10% kind of a gains, what we saw a week before, Nifty rallied about 1.5 odd percent, and it is holding the psychological level of 15,000. So that way, things have been pretty steady for the markets. I think what we are seeing is more of a broadening of the market, and which is where we have seen in this particular week mid caps doing extremely well, up about 2.5%. Small caps doing even more better at 4.5% kind of a gains. And since it's a sort of a result season going on, so we had number of results across sectors. Largely, the results have been pretty positive, and I think global cues have also been positive, and which is why markets have been sort of, despite the expectation of some consolidation, markets have been holding on to the gains what we had seen before.
Amongst the best performing indices, we had PSU index doing very well. It's up about 5% this week. Which of the PSUs are you betting on, and which you like the most?
So in PSUs, largely given the historical performance, really do not have much of a liking for the space. But I think defense PSUs is something which we like the most. Something like Cochin Shipyard, Midhani, Bharat Electronics. I think these are good names which one can look at. Largely because the opportunity pie for them is far more longer. There is no threat of disruption, which is what a lot of PSUs like, say, on the energy side, which are facing. And we had results for some of these companies like Coal India, NTPC, Power Grid. So defense PSUs look a lot more better. Plus, I think you have logistics players like Concor, which are looking quite attractive. And I think if DFC is going to start by April 1st, then the logistics space is also expected to become an interesting place.
IT and metal index both up nearly 1.5%. IT did a bit well, but last 2 days we had seen a bit of selling at higher levels also, if particularly for Infosys. You had changes in MSCI index and all that happening. So what should one do in the IT space? Which one is the best pick at this levels?
So in IT, largely, I think IT and pharma are sort of structural positives, big beneficiary of the post-COVID scenario what we are seeing, because because of the virtualization of business, then a lot of business are moving on the cloud side. Then there is a good amount of spending expected to happen on cyber security. Now, in IT, largely, if you look at most of the companies are expected to grow in the range of 13, 14% dollar revenue growth to 18, 19 odd percent. So I think most of the companies are, so it's a big tailwind. Most of the companies are looking good. But I think something what we like more is more of persistent than Mindtree besides the tier one names like TCS and HCL Tech.
Anything you're betting on in metals? Tata Steel had good set of numbers, and they are planning to reduce their debt by $1 billion per annum. It's going to be difficult, but then Tata Steel, any your call on Tata Steel at these levels?
So we have seen, so metal was one of the best performing segments last year. In this particular week, we had a number of results for metal pack. So Tata Steel, the standalone EBITDA per ton was the highest at 20,000 rupees per ton. Largely, the capacity is fully utilized. Europe is somewhere where they are still sort of struggling. I think what they've mentioned is that they will announce their capex plans in Q4. I think that will hold the key in terms of the kind of capex what they'll do and the expected debt reduction which can happen. So at this point in time, I think capex is an important lever to sort of consider. And given the run up what we had seen, which is why we have recommended hold on a stock like Tata Steel. But I think once we have clarity on the capex, the kind of capex or the quantum of capex they are going to do, I think that will sort of decide the future course of action. And I think same thing holds for Hindalco as well. Very good sort of numbers. Novelis numbers were already good, and the standalone numbers were also came out to be pretty strong. So I think metals, you need to see what kind of a capex they announce. I think that holds the key.
Talking about auto space, M&M did quite well. What is your take on this?
So M&M historically has done very well when their ROEs have been 18 odd percent. But M&M over a period of time has been sort of investing into a number of businesses, and as a result of that, the capital efficiency of the entire company has sort of gone down. Now the company has consciously chosen a path of again turning or becoming more capital efficient, and which is why I think they are ready with sort of parting ways with SsangYong, wherein they were making losses in excess of 3,000 odd crores, which will come down significantly. So and then they are in the process of probably moving out a lot of other businesses which will not sort of form the standard criteria of those what they would have. So from that perspective, structurally, it is looking very positive. Tractor sales, which is the key component for them, has been doing very well, expected to do next year as well. I think where they are sort of struggling is because of some chip shortage. There is a pressure on the PV side. But I think that's a sort of a 3 to 6 months kind of phenomena. But structurally, I think with capital efficiency being the core, this stock we had a previous buy and we will continue to maintain a buy.
Let's talk about a few high value stocks. I mean, MRF touched nearly 1 lakh per share value for investors. I mean, uh, now we have Page Industries, which is about 30,000 levels, and the strong performance that Page Industries has put in for Q3. What is your take on this the company? I mean, would you be investing at these levels?
So I think in Page, see one, the valuation is quite rich. So it is trading in excess of 60 times on a forward basis. Now, number wise, yes, after a good number of quarters, we are seeing double digit kind of a growth. But I think in men's segment, the growth is still not robust, which is what we would have expected. Largely, it is leisure wear, which is sort of helping them more. So I think till the time all these sort of levers don't perform, it is very difficult to sort of turn bullish on this stock, given the fact that it is trading expensive. But I think you have companies like TTK Prestige, which have sort of given out very good set of numbers. Plus, they are giving sort of going to do a decent amount of capex. All their business segments, whether it is cookware or cookers, all of them are sort of, it's a very broad-based growth what we are seeing. So that looks far more sort of attractive compared to something like Page, wherein I think the growth is driven by one particular segment. We would need more broad-based growth to turn positive on the stock.
We saw RIL coming back in action this week, up 5%. Will it hold or will we sell off again?
So RIL will not be able to comment because it's in our restricted list. So that is something which I will not be able to comment.
Okay, let's talk about the crude prices now. Crude surging above $60 per barrel level. Your take on OMCs? What should one do with HPCL, BPCL, IOC, like company?
So in oil marketing companies, some of the companies which came out with results in this week or prior week, see the GRMs are still quite down because the diesel slate is still soft, largely because the airline demand, the fuel demand from airline is still sort of muted. And so number-wise, you really do not have much of an encouragement to sort of look at. Even if you look at domestically, the diesel demand is still soft because a lot of urban pockets have yet not fully sort of open. So at best, these stocks are sort of trading cheap. So that is what typical argument is. But structurally, I think see, this sector is witnessing sort of a disruption. So which is where I think, unless say for a company like BPCL, if it gets acquired, I think it remains to be seen which company is acquiring and what is it that they would want to do. So retailing is a very interesting pie, say within oil and gas business. Rest refining, I think, will remain neutral. Really do not expect a structural growth there. So largely, we have been sort of avoiding that space, and I don't think that view changes or will not change anytime soon.
In the mid cap space, we had some big performers like Motherson Sumi, Graphite India, Concor. In mid cap space, any of the stocks that you like and would recommend buying with, we have already seen much of a surge coming in all these.
So, like I said, one of the stocks which we have been positive is on FLA, which sort of the numbers were, I think, a week before. Now, this company delivered about 60% kind of a revenue growth and a good double-digit bottom line growth, and it's a sort of a big play on smartphone penetration and online spending. And structurally, also, we expect that it is going to deliver 35% kind of a CAGR growth in top line and slightly higher growth of 40% on bottom line. So it's a sort of a portfolio stock and has got a good tailwind from the overall post-COVID scenario. So that is one. I think Bajaj Electrical looks quite attractive. So their fan as a segment or the electrical consumer durable business is looking very good. I think Voltas numbers, especially the UCP, which is the AC division, the numbers were pretty good. See, it's a seasonally weak quarter for them, and in a seasonally weak quarter, you've delivered good set of numbers. Margins have expanded. Plus, in case if you sort of demerge the project division or the EMPS division, I think the roles for this company will turn out to be very positive. So I see similarities between Bajaj Electricals and say Voltas, because project business is something which is a low ROS business and consumes a lot more capital, whereas the electrical consumer durable or consumer durable segment is a very high ROS segment. So re-rating possibilities have been there in Bajaj Electrical. It has done well. We would expect it to sort of keep going well. I think same holds for Voltas as well.
FMCG did not do well this week. I mean, it was the only index which was down nearly 1%, with some other indices also losing this week. FMCG, ITC, on the dividend front, last week we spoke. You said you stay away from this company as such. Dividend did not encourage and did not buoy the investors as such. So, what would you do in the FMCG space? Any company that you like?
So for ITC, I think the classic problem still remains. So while they have solved one problem in terms of not really putting money into low ROS business like say hotels and other businesses, and sort of increasing the dividend payout, which is why they declared a 5 rupee kind of a dividend. So dividend yield wise, it is a good play, but structurally, I think the challenges still remain. One, the cigarette business still down in single digits in terms of volumes. See, I think as long as you will have concept of work from home remaining there, I think the recovery in the cigarette volumes will take longer than expected. The other thing is that the FMCG business did not grow that much as compared to Q2. And then hotel business, the recovery was slower, largely because most of their room keys are in what I call business centers or key metros where the demand for leisure is less and more of business demand is there. So that is sort of not really helping them. And paper also as a business it did not do well. But I think we like in FMCG, we like more of food companies because food has got a very long value chain, can be captured. And as more and more women join workforce, so the demand for processed food or packet food is going to sort of rise. And which is why something like Tata Consumer or Nestle's, so all these are sort of expensive stocks, but for them, the opportunity pie is quite large. So which is where I think structurally these names look better. Besides that, something like Zydus Wellness looks good from a niche segment perspective.
Anything to buy in banking space?
So banking, largely tier one banks have been doing well. And like, for example, Kotak this week made a new high. So our sense is that all your tier one banks will continue to do well. We have seen some re-rating of some NBFCs, especially, say, for example, IFL and say M&M Finance. Largely, for example, M&M Finance is clearly saying that whatever has happened has happened. Worst is behind them, both in terms of asset quality. So from next quarter on, we'll see growth and asset quality concerns sort of peaked out. So NBFCs, some of them can be looked at, but I think banks are looking far more structurally more positive. I think this week we have seen non-banks, especially insurance companies, doing well. Because up till now, largely the challenge with insurance companies is that the renewal business was doing fine, new business premium was sort of muted, but I think the new business premium for most of the insurance companies, except for LIC, have come out in good double-digit kind of a growth, and which is why I think something like HDFC Life and other players are looking good. They've done so. We would expect them to sort of keep doing well, even for going forward also, and probably next week as well.
Any key event that you're watching out for next week?
So result season is largely over. So commodity-wise, we would not expect much of a movement because again, China, holiday season coming up. So from that perspective, I think as long as market does not sort of breach the psychological level of 15,000 levels, I think we would expect that these small caps and mid caps will continue to do well. So this year is of mid caps and small caps. And I think, see what has happened in the last 2 years, they have not really done so well. The small cap index is still down 18% from their previous peaks. So our sense is that you will see a lot more broad-based performance in overall markets, and which is where your mid caps and small caps will do a lot more better than the large caps.
Thank you, Pankaj, for being with us.
Thank you so much.
With this, we come to an end of this week's market wrap. We'll meet next week again. Till then, goodbye.
Thanks.
Thank you.
Yeah, bye.